Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys. What is going to be nothing short of another jam-packed daily market update on this smashing Saturday. I'm wishing you all a wonderful weekend. First of all, let me just start off by apologizing for the video quality. I'm currently at home, left cameras at the office, not that fussed about going back to the office to get them, so the webcam shall make do for today. However, despite the quality of the video in regards to the webcam being used, we are committed to bringing you a quality daily market update. And that's exactly what we're going to be doing. We've got some huge news coming out of the SEC. They have now cleared the way for Bitcoin options. We're going to be looking at why this is significant. We're going to be hearing from an analysis from Bitwise, who is talking about the leverage nature of what this is going to mean, the explosive upside that this could see for Bitcoin and thus the cryptocurrency market. As Bitcoin is still that tide that rises and sinks all ships, we are also going to be looking at how the SEC have exempted BNY Mellon from SARB 121, allowing them now to custody crypto without those kind of heinous regulations or cumbersome regulations put over many of the banks. We've also got news in regards to another bank actually now making way for crypto facilitation. So huge news. We're going to cover all of that. It was monumental what the SEC did yesterday. We'll be diving into that. Let's just start things off by looking at the markets broadly, sort of recapping on Bitcoin. It's been a great week for the markets, hasn't it? We saw the Fed cut rates for the first time since 2019. Obviously, they cut rates in 2019 on the back end of that kind of clogging up of the reverse repo. Very different scenario that we're in today. It really still does wind me up when I see people talking about, okay, the Fed have cut rates, that means the market's going to crash. What you've got there is people regurgitating untrue information. Milton Friedman gave this great quote, and it's not his quote, it was from somebody else, where he says, it's not what people know that's the problem, it's what they know that isn't so that's the problem. And if you look at the past 14 times, the Fed have cut rates. 12 months later, the S&P, 12 times out of that 14 times has given you a positive returns. Only 2 times it hasn't, and that was on the back end of the 2000 dot-com crash or telecom crash, and of course 2008. And unless you see a dot-com crash or you see a mortgage-backed security problem today, we're in a very different environment. And you need to, looking at something that's played out previously and expecting it to play out today under a totally different set of circumstances, to me is idiotic. And it's a idiosyncrasy when people sort of say every time the Fed cut rates, the markets crash. It's simply not true, ladies and gentlemen, and we've shown you that on many of the occasions. We also looked at that Schwab report. So the Fed cut interest rates. We looked at a number of markets actually going into yesterday, or going into the FOMC, and we said, look, these are very likely to break to the upside. We looked at the US 100. It's going to take me a little bit of time to load here. We looked at this sort of pre-breaking of this sort of capping grind line. You can see US 100 likely on its way up to $20,447. We looked at Nvidia, which is yet to break, but likely going to do so. Bear with me, guys. Internet here isn't the best. I think Nvidia's potentially going to want to set up and see a move to 184. We looked at the likes of a small-time Bitcoin pattern that aligns with the broader patterns that we have for it. Bitcoin, of course, broke on the back end of this, potentially taking Bitcoin to $84. $84, that would be horrific, wouldn't it? 84,000. And we looked at a number of other things. There's lots of things setting up. There's lots of confluence in regards to the charts right now. We know that's all going to be driven by liquidity and the big driver of liquidity, which is the Fed, which is going to impact the dollar and manipulate markets through the Forex market. As the dollar comes down, which we expect it to do so, and has been very much going in the direction that we want it to, your risk markets are going to continue to do well. And we've got lots of targets. Even the S&P, for example, I think the S&P is potentially, do I have a target for this? On its way to 6,242. Crypto is going to do well in this environment. Bitcoin dominance is likely going to roll when Bitcoin starts to perform well. Altcoins have overperformed to the downside, Bitcoin's downside, and they'll overperform Bitcoin's upside when things start to move up. And this is where you're going to see Bitcoin dominance really start to roll. So we've also took the splitter here. I think we've got this great time ahead of us. We've got lots of confluence in regards to the short-term pattern that we just looked at for Bitcoin, aligning with the broader patterns that we've got. We've got 3 patterns here that ultimately see Bitcoin move on to higher prices. We've looked at the kind of big macro pattern, potentially taking you to 309. We'll look at potentially some catalysts for this in just a second in regards to what the SEC did. But you can see all the technical kind of patterns that we have here giving us confluence. And I think Bitcoin dominance is not far off rolling at all, ladies and gentlemen. In fact, you might be at that turning point now in much the same way that we've seen. Remember, alt season typically happens around about 214 days post-halving. Go and look at the charts for yourself. We're not just making that up. We get that from the charts. Now that we've sort of covered things broadly, market's in a great position. Keep your eyes on Tesla. Tesla's been one that we previously shouted out saying that it's going to double and then some. We actually have higher targets for Tesla, but we'll share those at a later date. You can see how this is sort of progressing. Also, Amazon is one that we gave. This is likely going to set up, and you're going to see that target that we gave all the way back at 120. Crypto's going to do well. We're getting lots of upwards signaling for the markets. Crypto's going to overperform that, and we had the Fed kind of sort of green lighting many things. What I want to do now, guys, is actually talk to you about something monumental that took place yesterday. And we don't like to bring Michael Saylor up too much because I think some of his arguments are a little bit washed. But he tweets here, the approval of options for IBIT will accelerate institutional Bitcoin adoption. Now, it's very interesting, isn't it, that all the Bitcoin maxis are ultimately praying and hoping and backing the likes of BlackRock and all these people that Bitcoin was essentially made in the face of. But I think these people care more about the price of Bitcoin going up, and through that, it will gain adoption. So there's a lot of grey involved, I think, in that. But this is from Eric Balanchunas, the man to follow when it comes to certainly ETFs within the United States and more broadly. Options approved. SEC has just granted accelerated approval for the listing and trading of options on IBIT. Here's the full approval. Now, I couldn't be happier about this. This is just the start. So the SEC has now came out and admitted that crypto assets are not securities, and that's not what they meant by crypto asset securities. It's just insane, the L's the SEC has been taking to our delight. But I couldn't be happier about this because options give you, certainly in the United States, you can get options further afield. We're looking into some options in regards to some altcoins. But options give you a kind of leveraged play. They open up a lot of things, and we're going to talk about that because we're going to be looking at a hot take from Jeff Park, who is head of Alpha Strategies at Bitwise Invest. I might reach out to him and see if we can get him on the show to talk to us about this in more detail, because he's talking about the kind of explosive nature of this in regards to options now being allowed by the SEC. The SEC is just losing. Eric Balanchunas goes on to say, I'm assuming others will be approved in short order. Huge win for the Bitcoin ETFs, as it will attract more liquidity, which will in turn attract more big fish. This is a nice surprise, retiming, but not a shocker, as Jeff Safar and I have gave 70% odds to the approval by the end of May. So a little bit over that. Important note, this is just one stage of approval. The OCC and CFTC has to approve as well before they officially list. They are likely to do that. They're a lot more friendly to the crypto space than the SEC. They're the kind of juggernaut to take out, first of all. The other two don't have a clock, so not sure when they'll be approved. A big step, though, nonetheless, that the SEC came around. This is unbelievably significant, guys. It really is a big, big deal. And this, of course, is from Jeff Park. If there were one thing to read today, read the game-changing nature of Bitcoin ETF options. Read and bookmark this one for 2025. It's going to be wild. So we're looking at all these technical patterns for Bitcoin. And when you look at things technically, really you're predicting the future events that are going to take place. If something's going to go up in price, there's likely going to be a driver of that. And it could be fundamental news. It could be something like options. I'm looking forward to options personally. And also, if you understand, just on a side note, what options unlock for this space, certainly when you look at trading that's done on exchanges, predominantly the cryptocurrency, solely really the cryptocurrency exchange in terms of volume, it's done in USDT pairs and perpetuals. You're now going to unlock essentially the Forex liquidity and not just stablecoin liquidity for the crypto space as a whole. This might be why we see USTD going down. Obviously, we also think that due to regulations like JP Morgan are saying, USDT dominance is going to roll with the rise of real USD, all these things. We talk about it a lot. But let's dive into what Jeff Parks has to say, because this was really, really interesting. And he goes on to say, with today's approval by the SEC to list and trade Bitcoin ETF options, I shared that we are on the verge of witnessing the most extraordinary upside vol of vol in financial history. I felt this deserved a fuller explanation, so I want to highlight a few characteristics of Bitcoin, the nature of the regulated options market, and the powerful combination of the two. Without exaggeration, this marks the most monumental advancement possible for the cryptocurrency markets. Boom! Let's get into it. For the first time, Bitcoin's notional value will be fractionally banked. With ETF options, what do I mean by that? Whilst Bitcoin's non-custodial cap supply is a great virtue, it has also been a drag, limiting its ability to create synthetic leverage. Despite Durabit's efforts, it never adequately solved the counterparty versus capital efficiency matrix for wider adoption. And CME futures options requires too much active management. Now, for the first time, Bitcoin will have a regulated market where the OCC protects clearing members from the counterparty risk. This means Bitcoin's synthetic notional exposure can grow exponentially without the JTD risk that have kept investors at bay. In a liquidity-driven world, unlocking synthetic flows with leverage represents the great opportunity for Bitcoin ETFs, enhancing their financial utility compared to the spot market. Additionally, Bitcoin can now express duration as part of a leveraged calculation for the first time. Retail traders have embraced preps to take on leverage, but these instruments are imperfect, more akin to a series of daily 0DTE options that must be rolled over constantly. With Bitcoin options, investors can now make duration-based portfolio allocation bets, especially for long-term horizons. There's a good chance that owning long-dated OTM calls as a premium spend will give investors more bang for their buck than a fully collateralized position that could drop 80% over the same period. People often compare Bitcoin to a call option due to its premium decay and occasional explosive upside. Now you can bet on vol of vol to the upside with the same or less premium while capturing more delta over a long time frame. An extremely compelling opportunity. So let's break this down because we're getting into financial, technical nonsense. And these finance people deliberately make things as complicated as possible to understand so that you normies don't get it. Options, okay. Let's separate this a little bit more. Options from a sort of fundamental what crypto is trying to do point of view. Kind of against the whole ethos that Satoshi put in place about moving away from these sort of financial institutions. But options from a portfolio and a risk management point of view are a godsend. Because if you look at holding a spot Bitcoin, you'll now be able to take an option out, a dated option, where Bitcoin might go down 80%, but your option in regards to betting on the price going up doesn't, it's a while out. So that option won't lose 80% of its value. So not only that, it kind of compounds into a lot of leverage. And this is what he's kind of highlighting with vol on vol. We should definitely do a longer video on options. Certainly for myself, for example, this is something that I'll use and utilize because options actually give you the option to leverage in a far safer manner than I think the cryptocurrency space currently offers with kind of 100x. Even nobody should be trading with anything over 3 or 4x leverage. People shouldn't be trading period when it comes to crypto, let alone with leverage. Options are going to offer people, certainly larger players, a great way to kind of leverage up and ultimately drive money into the space. And this is what the whole thing is really about. So Bitcoin also has a unique volatility characteristic, and this is why this is going to be huge for Bitcoin and crypto specifically. It won't just be Bitcoin, it'll be crypto more broadly. And one of the most important is the volatility smile. Most equities indices display a volatility skew where upside vol is cheaper than downside vol, i.e. protection is more expensive than speculation. Makes sense, right? Bitcoin is unique because melt-ups are as frequent as meltdowns, so the market demands a risk premium for both sides. The practical implications, it is seen in the second order Greek called Vana, becoming more ITM in the money. The rate, that's all that stands for, the rate of increase slows. This positive Vana, which creates a short sort of drag. However, Bitcoin options have negative Vana. As spot goes up, so does volatility, meaning delta increases even faster. When dealers who are short gamma hedge this, gamma squeezes, Bitcoin's case becomes explosively recursive. More upside leads to even more upside. This is the crazy nature of this, as dealers are forced to keep buying a higher price. A negative Vana gamma squeeze acts like a refueling rocket. This is potentially what's going to see Bitcoin get here and above. And what's the crypto space going to do more broadly on the back end of all of this? This is huge. We want to spend the time talking about this. Goes on to say, the most crucial factor that ties all of this together, Bitcoin itself cannot be diluted to accommodate this newfound, so it ends up with a supply crunch, leverage. Compare this to stocks like GME or AMC, where management can issue new shares to exploit price anomalies, putting a cap on the stock's rise. Bitcoin can never do that. You might ask, but Jeff, what about commodities like oil or natural gas? Aren't they comparable? And if so, why is Bitcoin different? The key difference is that more physical commodities have expiry dates, meaning they tend to trade with the futures markets, not the spot markets. Futures markets, unlike spot markets, vary in gross and notional exposure based on expiration dates. And net interest or physical versus paper. So they don't allow focused participation in one direction, i.e. people trade both long and short in the curve and physical versus paper. Furthermore, these markets are subject to supply manipulation by groups like OPEC, amongst others. In summary, the Bitcoin ETF options market is the first time in the financial world the world will see a regulated leverage on a perpetual commodity that is truly supply constrained. Things will likely get wild in such scenarios. Regulated markets may shut down. But the remarkable thing about Bitcoin is that there will always be a parallel decentralized market that can't be shut down, unlike GME, which, as you can imagine, will add even more fuel to the fire. It's going to be unbelievably fantastic. Guys, I'm not even going to get into the other things that we were going to get into today because we've covered a lot. So we did have news that the SEC is essentially, we'll cover this in tomorrow's market update because we've gone on for a while now. The SEC have essentially now allowed an exemption in regards to SARB 121 for BY and Mellon. The low integrity move would be for the SEC to grant exemption to certain well-centered, connected big banks, which is essentially what they've done. Unchained did a great report on this. And we also had news in regards to DZ Bank. It's essentially going to enable 700 banks to offer retail customers the ability to trade and store cryptocurrencies in licensed fiduciaries, custodial services. So we're not going to get into all that because we've just covered or uncovered what is going to be huge in regards to the SEC on Friday, yesterday, now having allowed options to be traded. The possibilities or the ramifications of this cannot be understated. And we're going to do a lot more digging on this. We're actually going to reach out to some people to get them to come onto the show to sort of explain this in more detail. But there's going to be a real supply crunch that's going to come on the back end of this, or a real kind of explosion towards Bitcoin's price that's going to come on the back end of this. And this is going to have broader contagion for the crypto market, as Bitcoin's still that tide that rises and sinks all ships. And certainly you're also, I believe, in the future going to see altcoin ETFs and altcoin options. We're away from that, but that is likely the scenario or future that we're moving towards. So the stage is set, guys. Yesterday was absolutely huge. Let me know your thoughts and comments in the comment section. And on that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you all in the next one.